This is the Bitcoin Made Simple podcast. Here's your host, Corey Tusick.
This is the Bitcoin Made Simple podcast. I'm your host, Corey Tusick. My goal with this show is to make Bitcoin simple enough that even someone like me or you could understand it. I don't come from the finance world, so I have a lot to learn on this journey, and hopefully you can learn something from it as well. I'll be interviewing people all over the Bitcoin world, including podcasters, comedians, actors, athletes, investors, and anyone in between, to learn about their perspective on Bitcoin and how they see it fitting into our futures. I hope you enjoy the show, and thank you for listening. Today on the show, I have Shayne Mullen. He's from Block Fi. If you don't know what Block Fi is a platform where you can lend your Bitcoin, you can earn interest on your Bitcoin, and a bunch of other things. And it's something that I'm interested in personally, and I kind of want to see how this is going to play out here, because I see it being of great value to Bitcoiners, especially those hodlers who've been holding for a long time. But even if you're new and you're looking for a way to have your capital earn some additional income, or maybe looking for ways to leverage your Bitcoin position, BlockFi is a great company, I think, that has a lot of great things lined up for what they're doing right now, but also in the future. So I really enjoyed my talk with Shayne, and he kind of helps to explain how the how you can earn interest and helps give people confidence, I think, and everything. So without further ado, here's my interview with Shayne Mullen. All right. I am here with Shayne Mullen from Block Fi. Hey, Shayne, thanks for coming on.
Yeah, Corey, thanks for having me, man.
So I got to ask you, so do you have a standing desk?
I have a standing desk. It's actually a standing desk platform that I put on top of my desk.
Okay.
But yeah, I work in an office at home, and gotta get the legs moving, get the blood flow going.
Yeah, I'm working on that as well. Being cooped up at home. I have, like, right now we're in the process of building a new home, and so we're still in our starter home, but we have all our bedrooms are taken up by kids. Like, the office that I used at home is now a bedroom, and it's just like I was trying to work on the couch in the basement and
squeezed out of everywhere you can work.
Oh yeah, and it's just like it is not ideal at all. And I have like a new situation, like I'm gonna build like an office built at our new house, but I cannot work in the basement. I was like sitting on the Chase lounge and like falling asleep like while I was working. And I was like,
doesn't help productivity.
No, and this is not healthy either to just like lay all day. You got to stand and move and all that stuff. So
my whole thing was like I'd always be sitting right on calls and on Zooms, and then I was like, well, why don't I stop doing so many Zoom videos, because I'm doing 10 or 15 a day, right? Because things are just crazy here. And I started to take calls, and I would stand up and I'd walk around my apartment taking calls, or around this room, and I was like, I have a lot of really good energy and really clear head when I'm standing or walking or moving around. And then I was like, why don't I just have this standing desk so I can do that right while I'm on Zooms as well. So far so good. It's just after 3 or 4 hours of it, you're like, all right, I gotta sit down. I've had enough.
Yeah, I'm gonna have to invest in one of those though. I think that's a good idea, because I do find when the weather's nice and I'm walking around the backyard, it's that's one of my favorite places to work. It's like, man, I'm just ideas are flowing. I'm so much clearer.
It's easier to communicate. There's just you're sharper, a little bit more accurate with your thoughts and your ideas. I highly recommend it. I'll send you the link of the one.
Okay, cool. So to get into BlockFi and Bitcoin, because this is not a standing desk podcast, unless people really want that, we could go that route. And so how long have you been into Bitcoin? How did you first get into it?
I've been in just general cryptocurrency since 2017 as a passive investor, not directly in the industry. I first started reading about Bitcoin it had to have been like, I remember reading a Bitcoin article on TechCrunch in like 2011.
Mm-hmm.
And it was talking about like e-money, like, early kind of 90s. And then this evolution of this new, like cryptographic, new technology, form of money, distributed. I didn't really understand it at the time. And I think at the time, the only way to like access, like the way to access it, you had to be relatively technically savvy. You couldn't like just go to an exchange and create a login and a password and move some money over and buy the Bitcoin. And I mean, in 2011, you had to have a much deeper knowledge of how to get access.
Mm-hmm.
So I was like, this is interesting. This is cool. Very, very unique. Fast forward like 6 years later was my first foray into actually buying, which, made a couple allocations to Bitcoin and Ethereum, but never worked in the space until I joined BlockFi, which was about 8 months ago.
Okay. And hopefully you didn't, that would be impressive. Did you buy the top and then hodl and and wait? Or if you were in 2017, that's an interesting time to get in.
Yeah, it was like earlier. It was probably like late 2016, early 2017. I just held. Like I didn't do much. Look, again, I wasn't like and also at the time I didn't have like a tremendous amount of like disposable cash just to like park into these like alternative assets.
Mm-hmm.
And so it was more for me like, okay, I'm going to make a purchase. I'm going to read about it. Like I'm going to invest a little bit of money into this so that I actually like learn about what's going on, take a stance, listen to podcasts, have it be like a hobby that I'm interested in, which it has been and continues to be. And now it's a lot more, consumes me a lot more from a business perspective. But yeah, I just kind of like held on. And then, this year, early last year, I guess like later last year, things really started to pick up. And then over the last months, as you know, it's just been absolutely crazy.
Yeah, it's nuts. I'm always curious. I haven't found somebody yet that bought at December 2017 and is still in the Bitcoin world, because I would just, it'd be like the worst possible time to do your first investment.
Yeah, I was like, I almost like didn't even look at my account. It was like that. It was like that kind of approach. I'm like,
mm-hmm.
I'm going to follow the space. I'm not looking at my account. I had a Coinbase account like everybody, right? Who was like a relative, call it crypto curious person at the time. Just didn't really look at my account at all. And then, made it through the weather, made it through an additional weathering in last year, which was also very scary. And then, continued to purchase throughout last year as well.
Yeah. So one thing I've been asking people is, how would you explain Bitcoin in its simplest terms, like to somebody that's brand new?
Yeah, I mean, look, I think the best way to describe it is a new technology that allows for individuals and businesses to exchange value across time and space. If you define exchanging value across time and space as money, then Bitcoin is digital money. I don't typically get too much deeper than that if I'm talking to like my grandmother, but if I am talking to like, because there's an aspect of the money piece, right? Where, accessible across time and space, settles instantly, consensus decentralization from like, a validation perspective. And it is a store of value in that capacity. And then I think there's also then relation to, well, if we're relating to money or currency, right? And the effects of how currencies are used globally. Well, there also needs to be like some conversation about Bitcoin as an asset, right? Mm-hmm. Because Bitcoin as an asset is more of an adoption, I think more of a thesis that companies and investment firms and people are adopting now versus 2017 when Bitcoin was a currency, right? Mm-hmm. And what I mean by the difference there is that, in 2017 before, right, the value of Bitcoin would be, effectively, based on supply and demand. And supply and demand, a lot of retail people were assuming that Bitcoin would be used for buying things, right? So companies would need to buy Bitcoin to use to purchase things, right, overseas or whatever it may be. Therefore, increased demand would, increase the price, and therefore the use case would be more people using Bitcoin and spending it. The higher the price of Bitcoin, right? That's kind of like one of the fundamental themes I think I saw right back then. What I'm definitely starting to see now, and where BlockFi really comes into the foray on this stuff, is that, if you look at Bitcoin's kind of currency structure, and then you look at Bitcoin's asset structure, the asset is very similar to the likes of gold, right? Or a finite, call it like precious metal, or a finite asset that exists in our world today. So, if you think about it as a place to store value in addition to a currency, right, with the same scarcity levels as something like a gold, and with the kind of a huge surge of institutional demand and purchasing, viewing it as an asset as well, right? Like you're all of a sudden creating this like super powerful monetary, right, investment tool, however you want to define it. So, I honestly think we've gotten to the point where like people view Bitcoin differently depending on who you talk to, right? Like based on how you use it. The fundamentals and the facts of the technology are all the same. None of that will ever change, but it's like, what is the use case, right, on a go-forward basis, which I find pretty unique. And we have our own thoughts and ways of creating value in that capacity as well.
Yeah, and that's what I wanted to kind of get into, because BlockFi, I think, is something that you guys are bringing in a lot of new things into this space. And for people that are maybe holding, and I always recommend that people don't try and trade. It's like hodl and just let the value increase. It might decrease at some points, but there might be ways to create positive free cash flows and other things. So what exactly does BlockFi do? I mean, you can buy and sell cryptocurrencies and everything, but there's some new products you guys are offering as well.
Yeah, I mean, look, like BlockFi, we like to call ourselves a personal finance platform powered by crypto, right? So we provide similar types of personal finance apps and products that you would use on an everyday basis, yet all of ours are powered by either digital assets, Bitcoin, Ethereum, Litecoin, PaxG, et cetera, or stable coins, right? USDC, Gemini USD, Pax, right? We've got a few on Tether. We've got a few others coming on board. So in the traditional kind of personal finance world, when you have access to those tools, which I define as bank-like tools, or, SoFi-like tools, or things of that nature, our flagship product that we offer is a interest account, right? It is a high yield interest-bearing account that is effectively paid over the monthly on an annualized basis, where we will pay up to 8.6% on either your digital asset or your stablecoin balance, right?
Okay.
So that's more or less like the kind of first entry point, where it's, okay, I bought crypto, or I own crypto, or I have USD, and I want to earn interest on it. I want to use a tool like I use other tools in the personal finance space for my crypto specifically. Download BlockFi, open a BlockFi account, deposit your crypto, you immediately start earning interest. Right. So that's kind of like how we typically have our folks today enter into our ecosystem. From there, we also offer other personal finance type products, right? So we have a brokerage-like product, which is a trading function, no fee trading, buying and selling, right? So if you want to buy other currencies that we support, Link, Litecoin, right? There's a few others that will be coming out this year. You can do so in addition to Bitcoin, Ethereum, Pax Gold, and stablecoin. We offer crypto-backed lending, another really unique kind of personal finance tool that all different types of players provide in other spaces outside of crypto, typically unsecured, unless you're like securing your portfolio of equities, which like doesn't really exist in the retail space, or you're, securing your home and getting like a HELOC, right? Very similar construct. But for our product, it's, hey, you have Bitcoin or Ethereum, you have digital assets, pledge them as collateral, and we'll issue you a USD denominated loan at 50% LTV or 35% LTV, depending on what rate you want to pay, right?
Okay.
And then you pay us a 9% or a 7% rate over a 12-year period, and you can use that cash, those proceeds, for whatever purpose that particular USD denominated loan is for.
Okay. And then in that scenario, let's just say, I want a $50,000 loan, so I give you guys $100,000 worth of Bitcoin.
Yep.
And then, I owe you basically, 9% interest on that 50, but I keep the value of the Bitcoin. So no matter where the Bitcoin price goes, so if it goes up to
exactly. So if the
5x,
Bitcoin
then
goes up, 10x, you probably want to refi, right? And take some of the Bitcoin out of your loan, right? And put it back into your interest account. Now, if the converse happens, then we have a automated set of risk management measures that look at every single loan, both retail and institutional, in real time, right? Based on price. And we will send automated emails to our customers when price starts to get to a point where the collateral margin is too tight. Right.
And then in that scenario, do they have to post more collateral?
Correct. There's kind of two things that can happen. One is they post more collateral and then they're fine. Two is we margin call the loan, and they keep the USD balance that we've lent them. And then we just sell the Bitcoin or the digital asset at a price in the liquid 24/7 liquid market. And then we cover any sort of loss or interest with that particular sale in the call capacity. So what's really great about what's amazing about our product from an investor and being a retail yield bearer, right? Meaning like you giving us assets to earn yield, is that we've never lost a dollar, right, on our institutional and retail lending program, because we have these super automated 24/7 liquid triggers that occur on both sides of the house when you see these 20-30% price swings.
Okay. So I guess explain that a little bit with the how they work in relation to each other, the interest earning side and the loaning side. So because I think one of the things that a lot of people are going to start looking into is depositing to earn interest. So if I'm earning, what's the rate you guys offered for?
So on Bitcoin is 6%.
Okay.
For one bit, or for 2.5, and then it goes down to 3 after 2.5. For stablecoin, it's 8.6% annualized.
Okay.
So if you put, $10,000 in, you're going to get $860 at the end of the year, right?
And now this is going to sound like a really amateur question, but that is kind of what I'm doing this podcast for. So for anybody that's afraid to ask stupid questions, explain a stable coin to me like I'm 5 years old, because that is the one thing where I'm like, I get it, sort of, but well, explain a stable coin to me like I'm 5.
I think the first question I would ask you as a 5-year-old is do you understand the concept of a blockchain, right? And if you're saying you're a really smart 5-year-old, right? So you say, yeah, I understand blockchain. I understand proof of work. I understand validation. I understand the cryptographic piece of how blockchains work. So then all I would say to you from a stablecoin perspective is that stablecoins are USD or dollars issued onto a blockchain, right?
Okay.
That's it. They're dollars that live on a blockchain. Today, they all live in a relatively private siloed chain. So Gemini's has their own private, basket of USD fiat, right? That's sitting in an account that's custodied, where there's all these crypto dollars, right, living on the blockchain that are, one-to-one matches.
So those values don't go up and down.
Well, inflation, but like, yeah, no, it's 1-to-1 pegged to a, dollar in an account.
Okay.
Like, 9 times out of 10, that's how it operates in our space. So like really the only risk that you have with stablecoin is like, who's the issuer of the stablecoin? Are they like solvent and liquid and have like a good, strong balance sheet and good investment and well respected, et cetera? And, uh, are there like, let's call it stablecoin practices, the highest regard? That's really all you need to worry about in my mind.
Mm-hmm.
And today, like two of the biggest providers of stablecoins in the US are, Coinbase and Gemini, right? Two of
Mm-hmm.
the largest platforms out there, BlockFi being the third.
Yeah.
But so if you can get comfortable with the concept that you are literally just buying, right, a digital dollar, so you're just converting your dollars into the same value in the stablecoin value, then all of a sudden you can start to open your mind to some really unique things that stablecoins bring to the equation. One of the things that I think is most compelling about stablecoins is that they can settle, right, in
Mm-hmm.
almost real time.
Hmm.
So what does that mean, right? That means that if I, Shayne Mullen, wanted to pull $150 out of my bank account today, right? It would take either 3 days if I did it via ACH, right?
Mm-hmm.
Which is like Plaid and the typical method that you see, or direct deposit, or it would
Mm-hmm.
take like maybe like 4 to 5 hours if I was going to receive it by wire. But I'd have to pay $25 if I wanted
Yeah.
to get it through the wire, which is just out of control. So I either have to wait 3 to 5 days, or I have to pay 25% of my deposit amount just to get it in 3 or 4 hours, right?
Yep.
Conversely, we look at stable coins, and today this doesn't really exist, right? Like fiat bank accounts to stable coin. But if I wanted to move money from my BlockFi wallet, right, to your BlockFi wallet or peer-to-peer or to another wallet that I had, right,
Mm-hmm.
I could literally send the button, click send, and that transaction is going to occur in less than 10 minutes. It's going to settle, and you're going to pay zero fees for it. So
Okay.
just think about that in the scope of like general payments technology all over the world. When you start to talk about stablecoin adoption and bigger kind of like, bigger players starting to adopt stablecoins for cross-border payments and international exchange and trade and all this stuff, it actually makes a really huge difference because speed and fees,
Yeah.
right? So in BlockFi, on BlockFi, you are actually able to purchase stablecoin, right? And it's just a balance. So if it's like $1,000 of stablecoin, it will literally just say $1,000 in your account. And then we pay 8.6% in stablecoin on that amount of money that you have in that particular wallet.
Okay. And that's annualized.
Annualized. Yep.
So that's kind of okay. So then I'm actually looking at it from my own business perspective, because we pay royalties out to a lot of people all over the world.
Yep.
And that's something that there's a couple different products that we're working on. We're the one of my companies, we're currently developing the back end, and it should be launched in like a month or two. And it's a solution that I'm looking for is instant payments to
Mm-hmm.
people.
Mm-hmm.
And that sounds like something you guys kind of offer. So how does that work for them to get their money? Let's say I have a filmmaker in the UK and I'm in the US, and I can instantly transfer in the BlockFi. Do they then have a BlockFi account and they just have to have that connected to their bank account in the
Yeah.
UK?
Yeah. So for truly disruptive kind of cross-border banking and payment solutions, we're not quite there yet.
Mm-hmm.
I think the way that it would work in my mind is your network of recipients, let's call them beneficiaries, who are getting
Mm-hmm.
paid by you. would create and have or host a BlockFi wallet. That wallet would be denominated in a currency, a stablecoin currency of their choice, euro, whatever it is. And then we would effectively build a form of a debit card or something along those lines on top of that particular balance, right? Because then they don't need to worry about you can pay them instantly, right?
Mm-hmm.
And then B, they don't need to worry about removing the stablecoin off blockchain rail back into the traditional, ACH rail, back into their bank, which requires a tremendous amount of fees and all sorts of crap that we'll deal with on a daily basis, right? So I think generally speaking, the more the industry moves towards living and transacting and operating on these blockchain rails, the lesser fees there are going to be, and the less dependent people are going to be on banks. That's how I think it's going to play out, in all honesty.
Okay. So then stable coins is kind of like a solution to hey, let's do all of our, traditional fiat dealings on a blockchain.
On a blockchain. Exactly.
And that makes that simpler. Now, is that also do you think that's a good kind of gateway drug for people to get into?
Look, I think it comes with risks, obviously, right? One of the biggest risks is that fiat is backed by a government and it is FDIC insured in a bank account.
Mm-hmm.
Right. So theoretically, the US dollar, right? Your US dollars in your account, cannot go anywhere, right? Because they are completely risk-free and they're backed by the government and they're insured. That level of comfort needs to start, there needs to be some innovation in our space to get people to that level of comfort.
Mm-hmm.
And then I think you're going to start to see a tremendous amount of adoption from a stablecoin perspective.
Okay. So once people start feeling, and really that level of comfort, they just need to know the solvency of,
they just need to know, they got to get comfortable with custody, right? Where their dollars are sitting. They got to get comfortable that with the entity that's issuing the stable coin. And if those things, you're comfortable with Goldman's, with Chase, right?
Mm-hmm.
It's going to be the same type of education and trust game, which for us is a huge piece of the entire equation, right? It's we want to create a very trustworthy, safe experience for all of our customers, because this is not the easiest thing to wrap your head around, right?
No, yeah.
For somebody who's never done this before, and you're stable coin and interest 8.6%, that's 10 times the national average. That doesn't make any sense. Well, it's okay, right? That it doesn't make any sense. It's new technology. It's something that's being adopted as we speak. It will be part of everyone's life in the next 5 years. I 100% I'll own that statement, right? As fact. And it's our job and others in the space to educate, to help inform, to help make sure people understand what they should look out for, the risks, the benefits, but then to really help shepherd that, movement or adoption, right, away from the traditional standard way of doing things and to a newer way of doing things that adds more value, better speed, better efficiency, better security, better safety, right? All these things that our whole world, right, and all of the blockchain and crypto industry are pushing all the time.
Mm-hmm. Yeah. It sounds like I'm definitely, I got to explore more for personal, for business, my companies, but I think it's something that I agree with you. I think in about 5 years we'll probably be moving towards, I think a lot of the banks are going to be trying to catch up to you guys.
Yeah, I think there'll be a convergence, right? I think we're gonna build things that look a lot like banking type offerings or personal finance offerings. Banks are going to start to build things that have more of a, call it cryptographic or blockchain nature, right? Across their technologies or their technology stacks. And I think there will be like an element of, synergy at some point. I don't know how it's going to work or what it's going to look like, but Morgan Stanley just came out with a article and a press release saying that they're going to offer their private high net worth clients access to investment vehicle that tracks the price of Bitcoin. So whether it's like Grayscale or Galaxy or any of the other ones out there, like that's a big step in the direction of, banks accepting that products in the space are real, they're here to stay, their risk is within line with the bank's protocol, et cetera. Now that's very different though from a bank creating using technology, right? Crypto technology to actually power their business model. That is like two completely separate things, but at least we're starting to see like some folks come around. And I think it's good. It's good for the space regardless, right? Because it just continues that education, that adoption, that, bringing someone who's crypto curious into the crypto, dabble into like becoming someone who's crypto native.
Them with the way that they're like dipping their toes in is just so funny to me, because it's kind of like, it's like they see everybody having fun out on like this island and they're standing on the beach and they're like, that looks so cool. I bet you our party would really like it. So let's stand like ankle deep in the surf. And then we're all singing like, come on. They're like, no, we're good here. We're good here. Kind of like that Steve Buscemi gif of the, what's up, my fellow kids, where he's like got the skateboard.
That's such a good analogy. And then the other thing I would add is like, they're secretly, while they're standing in the water, commissioning a like boring tunneling company to try to tunnel underneath the island and just pop up in the center and then have their own little event, like, right in the middle of everything.
Yeah. Oh, like, hey, we've been here this whole time. They can't
find the island. They just keep going different directions.
They'll get there eventually, I guess.
We'll see.
So since I'm in the middle of like, mortgages, all that kind of fun stuff, is BlockFi something that can help people in that realm? Like, is it something that if you're looking to, purchase a home or, build an addition, something like that, and you own cryptocurrency, is BlockFi something? I mean, I'm sure you guys don't have 30-year fixed mortgages, but if you take a loan, what's the repayment terms? How long does that, usually span, the 9%?
Yeah, so it's a great question. We actually have a blog post about loan use, which I can share with you after this if you want to like blast it out or share it with anybody.
Yeah,
but
I can put it in the show notes.
Yeah, there are like all different types of purposes or like reasons people take out loans. Just to give you an idea of what our structure looks like today, it is 50 or 35% collateralized, right? Meaning that's how much you're going to receive, or that's how much you have to post to receive that amount. At the 50% LTV level, it's a 9% interest rate. At the 35% LTV level, I believe it's a 7.9% interest rate. I got to double check that. And it is an interest-only loan for 12 months.
Okay.
So you're only paying interest for 11 months, and then on the 12th month, you have to pay all of the principal back.
Okay.
But you can refi depending on where your balance is if you want to continue to push that balance out and pay another 12 months of interest only. So I personally wouldn't think about this like a mortgage where like you are paying something that's high price down over a very long period of time, and you're creating more of like a fixed payment schedule for yourself based on your income. I would think of this more as like, well, I guess everyone can use it differently, but the way I like to think about using it is like, I have a, set of dollars coming in the future. I want to make a purchase now. This is a really low cost way of me making this purchase now. And then I'll be able to pay that off, in the future with that set of dollars that's coming in. I've seen people use it to consolidate credit card debt, right? Multiple different credit card lines, 20, 30% interest. They just pay all their loans down and they just pay us. And then they refi, they pay the loan down at the end of the term. I've seen people use it to reinvest in crypto. I wouldn't suggest that to anyone who's new. to the
Mhm.
space that requires an extensive knowledge of how this industry works and the risks associated with price swings and yield and things of that nature. I've seen people use it for like a down payment on an apartment, right? Like,
Mhm.
you got to put that initial security deposit down or whatever it is. I've seen people use it for like car loan deposits. So putting like $3,000 or $2,500 down for
Mhm.
your vehicle or whatever it may be. But yeah, I'll send you the link. There's bunch of other use cases, but definitely like there's definitely ability to access liquidity without having to sell, right? Also taxes too, I think is one, like paying other taxes using the liquidity from your, secured crypto collateral. But there's all different use cases, and we have issued thousands and thousands, like hundreds and hundreds of, I think it's billions of dollars of loans at this point,
Mhm.
to retail folks who are, using it for some specific purpose.
So then you're not. It's another way to protect against, like, say, if you need to use some of your, Bitcoin, because not everything's on the Bitcoin standard, so you have to use some cash instead of taking it out and getting capital gains tax.
Yeah. Yeah. So like for me, right, like a great example is like, I just bought a new like Volkswagen Alltrack. It's like a,
Mm-hmm.
sedan or whatever car. I got it when I moved to South Carolina, which I live here now. I put down $2,500, right, for that car.
Mm-hmm.
So I said to myself, you know what? Rather than like selling some Bitcoin, having to pay a cap gains tax on whatever my basis is, which is pretty high because I bought some of this Bitcoin when Bitcoin was a lot cheaper in August of last
Mm-hmm.
year. I'm just going to post $5,000 of my Bitcoin as collateral, and within 1 hour, I got the $2,500, right, minus
Mm-hmm.
the origination fee, right into my checking account. I used that money to then put down on the car. I got a loan out on the car. I'm paying my loan down. And then I know that in 6 months, I'm going to get, a $2,500 check of income from work or whatever it is, life, like
Mm-hmm.
however you are making your income. And I'll pay that loan down. And I'll end up being able to, rather than having to sell my Bitcoin today because I needed the car, be able to take out a loan denominated in USD. I'll pay 6 months of interest or 12 months of interest, depending, and then I'll pay it down at the end of the term, and my Bitcoin does not change, right? I don't,
Mm-hmm.
no cap gains, no selling, nothing. Hopefully the Bitcoin is just appreciating over this
Yeah.
year, which I think it's gonna. All right. So at the end of the day, like I've actually made a better trade out of it than if I were to sell. So that's just like a very simple use case, but like that's how I would think about it.
So yeah. So instead of you're saving 11% basically right off the bat if you're paying 20% in capital gains.
Exactly.
Um,
I'm paying
you're
7% annual, right? Versus paying short-term cap gains, which could be anywhere in like the 20s.
Oh, that just opened my eyes because that's something where I'm like, like I don't want to pay any capital gains. I'm looking for ways to,
Yeah. Well, and like
leverage.
also too, like for a lot of us, or for some, like some people that invested in Bitcoin last year, like there is a serious cost basis now, right? Because it's gone up so much.
Yeah.
So, being able to access liquidity in an effective way is really important if you're, trying to, optimize for, low cost investments or house or, whatever it may be.
Yeah,
Just
that's
make
some.
sure, for everyone listening, like it is interest only, meaning you have to pay that amount at the end, right, of the
Hmm.
term. So just as long as you can manage that cash flow on your side, then, it's a great option.
Yeah, yeah. If you can, so you're paying the 9% interest over the 12 months, and then everything comes due at the end.
Yeah, exactly.
Um, and then on the interest earning side, um, I have to park my Bitcoin with you guys.
Yeah. Yeah. So the way that it works is you open an account, right? Username,
Hmm.
password, 2FA authentication, Face ID, all the security metrics, right, to protect yourself and your account. You deposit or transfer funds, Bitcoin, onto the platform. So you can do this two ways. One, you could transfer Bitcoin from another wallet, We have like thousands of people who have moved off of Coinbase and Gemini into BlockFi because they can just transfer their Bitcoin right into BlockFi and immediately earn interest. So that's one. And that's easy, right? You just get your wallet address out of BlockFi for Bitcoin. You go to your Coinbase or Gemini account, you type the address in, you send it over, it lands within an hour. Earning interest, you're done. That's one way. The other way is you can actually just ACH or wire funds onto our platform.
Okay.
So you can literally connect your bank account via Plaid, right? You select your bank. You select how much money you want to deposit onto the platform. You select the stable coin that you want to convert it to, right? That's how our on-ramp works. And then you press OK. And in 3 days, let's say it's 10 grand, you have $10,000 of stable coin in your BlockFi account. You get an email saying your balance has changed. You log in, you click our trade button, you buy $10,000 worth of Bitcoin. Right now, you've got your Bitcoin sitting there, 0 fee trading, and your Bitcoin's earning 6%. Now,
nice.
Whichever way you come onto our platform from an on-ramp perspective, that Bitcoin is actually sitting in a Gemini custodial account.
Okay.
And you have access to it whenever you need it. So you can pull it off the platform whenever. There's no like lockups or anything like that, which is really important to understand. Some platforms will be like, yeah, you can't move this off here, X amount of days. But once your Bitcoin settles on our platform, you can move it as you please. What effectively is happening is we have this massive book of Bitcoin just sitting in accounts, right? And what we do to generate yield for you is we go out, we say, all right, like Corey's got, well, it's not this specific, but we've got all these people who are earning 6% or lending us, right? Giving us their Bitcoin. We're giving them 6% for it. We then go out to institutional investors, right? So think of like the biggest names that you've seen in the news who are buying Bitcoin right now. Like, Susquehanna and Acuna and all these like massive players. They're all like tier 1A, super, legitimate investment firms. And they, right, to participate in the market, want to borrow Bitcoin from companies like BlockFi. And there aren't that many players out there, right? Banks, definitely not, that actually have a balance of Bitcoin like we do because of all the retail deposits, right? So we have a really great and compelling offer for these institutions where we say, oh, you need $50 million worth of Bitcoin to borrow in the form of a loan. We'll give you that. And we're going to charge you 9% interest annualized. The same way we do it on the retail side, just this time it's a crypto denominated loan. And we're, making probably a little bit more than we would on the retail side, 12-ish% on the APR. So now like that income stream, right, is going to pay down or pay us, right, for whatever revenue we want to take out of that, and then pay, our retail deposit holders, right? And we have hundreds of those institutional relationships, right, for all of our different assets, not just Bitcoin, but Ethereum and Litecoin and Link and stablecoin. And the use case, right, the purpose of an institution borrowing crypto is a lot different than the use case of an individual or household, right? They're two kind of separate buckets of use case. And like the best way I like to describe our institutional business is like a prime broker. I don't know if you're familiar with the prime broker world.
Not really, but go ahead.
Basically like a one-stop shop for a hedge fund to custody assets, get financing on assets, trade assets, and execute, right, and settle assets. Right, that is what a prime broker is for. We've created ourselves, become one of the biggest, most effective prime broker-like companies in the world. And now we're able to have this healthy balance of supply and demand, right? Where new assets come on the platform, we lend them out, the yields get paid down, we pay the yield out to you, right, to the retail customer. And then we sit in the middle. If anything goes wrong, which it hasn't, us BlockFi is going to get hit with losses before anyone gets hit with losses. Our shareholders and our employee equity and our equity on our balance sheet, which we just raised $350 million in our Series D like a week ago. So we have like lots of money right now. So we are incredibly well cushioned and well built with the added risk management program that I talked about earlier, right? The automated margin call and the 24/7 liquidation on the institutional side as well. So we've built this like very, very robust, insular, well-cushioned product that allows folks like yourself to lend to us, earn yield, stay comfortable, stay safe, right? Hit checking every box, and then hopefully growing with us over time as like your balance grows over time and we come out with new products.
So, what's the point of the institutions borrowing instead of purchasing?
Couple things. I mean, it really depends, right? So like institutions purchase for sure. We have what's called an over-the-counter desk on the institutional side of the house, which is literally like a trading desk for big, corporates or funds or whatever to come in and buy. Some firms are borrowing Bitcoin and other like assets to make markets. So this is a pretty interesting concept. Effectively, like in the Bitcoin or just in the cryptocurrency world, there is no central depository clearinghouse, right? Like Gemini and Coinbase and Kraken, none of these guys talk to each other in terms of like what's being traded, settled, pricing, whatever, right? So there are really large funds that borrow crypto, Bitcoin, for example, and go out to these larger exchanges. They have accounts at each one, and they basically all day are just arbitraging these exchanges and setting the market rates, right? And they're making money on spread. So they'll buy Bitcoin at 40 on Coinbase, they'll sell it at 41 on Kraken, at the same time, because that's what there's price dislocation.
Okay.
To do that though, right? To actually do that, make markets like that, you have to have crypto physically in a wallet on that exchange, right? Like you can't just like do this on margin or borrow and be like, I'll pay you later. Like I'm gonna do this trade right now, but I'll pay you later, right? Like in the crypto space, it doesn't work like that. Like in the equity space, you could do that. Like you could borrow like Tesla stock and just do that and make a market with Tesla stock if you really, if you had a good relationship and you were well defined or high credit worthy institution. In our world, you can't do that. So, which is great. And Bitcoin settles within an hour, right?
Yep.
At those sizes or whatever the rates are now. So if you want to make markets, if you want to be a participant there, you have to have the actual physical Bitcoin in a wallet at those exchanges, right? And so it creates a working capital demand, right? If you want to work that capital and make and trade and make your arbitrage and your spread, you actually have to have the physical Bitcoin. Well, do you want to go buy it or do you want to go borrow it, right? Pay 11%. And then, your annualized yield on your trading spreads are 70. So you're theoretically putting up zero cash, zero equity or small portion of equity or whatever it may be. Depending on our margin requirements, depending on who you are, which I can talk about in a bit. And you're, using that crypto to earn. That's one example. There are a few others that are a little bit more complex, but that is one way certain institutions use Bitcoin or Ethereum or Litecoin, et cetera. Hope that makes sense.
Yeah, no, that makes sense. That's because to me, whenever I'm sitting there, like I'm like, oh, I wouldn't borrow it, I'd buy it. But yeah, if you're looking to just make markets and
just make money, or like have like
capture the spread.
Arbitrage. Yeah, if you're looking for arbitrage positions, also like I think there's like an element of being able to hedge like future downside by borrowing right from BlockFi. There's all these different strategies that these companies do. The one other is there are public market trusts like Grayscale, 3IQ, Osprey. We don't work with all of them, but we do work with some, and we work with investors that want to access or subscribe to shares of those public trusts. Right. So The way that it works is that if you, investor A, want to subscribe to Grayscale shares, right? You have to put 1 Bitcoin or however many Bitcoin you want into the trust. The Bitcoins come off the market into the trust. They're locked up for 6 to 12 months, and then you are issued shares, a certain amount of shares based on the amount of Bitcoin you put in.
Mm-hmm.
Those shares, right, are redeemed. You can redeem them at what's called NAV, net asset value. NAV, let's say net asset value is $50. You can redeem them at $50 in 6 months. So in 6 months, you get all these shares at $50. Well, historically, Grayscale has been trading at a premium, meaning as soon as you redeem those shares at 50, the premium might be trading at $60 in the market. So you just made $10 per share on that trade over 6 months without doing anything, without having to do anything other than putting Bitcoin into a trust. So other folks will borrow from us to do a similar type of transaction.
Just do that.
Yes, but they do need to over collateralize in some capacity to us so that in the event that Bitcoin goes down or Grayscale goes down, again, we have a cushion of collateral, just like we do on the retail side, right? Just like you or me have to give 50% LTV, that fund or institution that's borrowing Bitcoin for a Grayscale trade has to give us collateral, cash equivalent, whatever it may be, so that in the event that something does happen, we have the ability to make whole and be okay, which we are, right, on everything that's happening right now.
And okay, so basically there would have to be a catastrophic 50% drop for anyone's loans to be called, or
for anyone's loans to be called, correct. No one's going to lose money. That's the thing, right?
You're not gonna, if you're investing, you're not losing money.
Exactly. There will never be there should never be a scenario where retail is not able to A, get their money out, or B, earn yield. Right. The only thing that will happen is over time, more entrants will come. Markets will be a little bit more mature. There'll be more liquidity, and the rates that we're paying you, that 6% Bitcoin rate, might come down to 5, or might come down to 4.5, or whatever it is. Right now, it's not going to happen abruptly. It's not going to be a step shelf function, but it will happen over time because that's how markets operate. Right. Okay. Where there's yield in nascent industries, people come to those industries, and then the yields go down. That's just
the nature of the beast.
Markets 101. Yeah.
Okay. So, let me run through an example, and just for simple math, let's say I put $100,000 in Bitcoin with you guys to earn interest. In today's price, it's hovering between 55 and 60. So let's just say, for simple math, it's 60, but over the year, it appreciates to 120 per Bitcoin. So, then the value that I loaned you initially, I was going to earn, 6% interest. I'm going to get $6,000. Does that, the interest, I assume, does it escalate with the price of Bitcoin? So, if it spends half the year at 200,000, the amount I loaned you is now worth 200,000. I'm earning 6% on 200K. Is that the case, or is it just 6% on the original amount?
Yeah, it's basically we calculate it at the end of the month, right? So your interest is going to accrue daily, no matter what the price of Bitcoin is, if it's going up or down. The end of the month, we're going to cut the calculation off. We're going to total up the daily accruals, and then we're just going to drop that into your account in Bitcoin. So
it'll be in Bitcoin, and it can either,
you can get it in cash, you can get it in stable coin, you can get it in other currencies, but most people are getting paid in Bitcoin interest, because then you have additional appreciation, right?
Yeah. So you can get it just put in right in and added and start earning interest on your interest.
You can. So effectively what will happen is your interest will accrue over the month. End of the month, will deposit that amount in Bitcoin into your wallet, your BlockFi interest account wallet. That will then be part of, right, the total balance, and then you'll earn interest on that. So it's not like 6% compounded month over month. It ends up being, the math ends up being 6% annualized. That's how the math works.
Okay.
So like with that monthly compounding and everything coming back in, it ends up being 6% annualized.
Okay, that makes sense.
Yep.
So who are the, the biggest publicly, like acknowledged BlockFi interest holders? Because I know there's people out there bragging about it. So who can you publicly say, since they talk about it on their Twitter?
Well, I think Jason Williams is he's the interest champ. We've given him that title. We actually sent him a heavyweight belt called the interest champ on it. He has made $1 million in interest.
That's awesome.
On our platform. But I think let me pull this up real quick so I can give you an idea of where we paid out in February. So every month we will effectively publish on our Twitter the amount of digital assets and the dollar amount that we have paid out in crypto to our users. Because I think it's really fascinating when you like hear some of these numbers. So we paid in February, right? We paid $35 million in interest paid to all of our members, all of our retail customers, which today we have about 275,000. This is 450 Bitcoin, 5,000 Ethereum, and $6 million in stablecoin. So,
wow.
We're getting up there. We're like, just to give you an idea of our business model too, and our size, like we're 550 employees. We just closed a Series D round that was led by Bain Capital, DST, and Tiger Global. So like all really reputable names. And we have about 275,000 clients, but the average balance is about 25, 30K. So our AUM is like, it's up to like 15, 16 billion. And we do, excuse me, about 40 million in revenue on a monthly basis. So the business is like thriving. Like we are mature, we are time tested, we are safe, secure. Like we are the place that people are coming to earn yields, right, on their crypto. And then we want to continue to be, right, like the place that can bridge the educational gap between traditional financial services and the crypto space, right? Hence why I like to define us as a personal finance platform powered by crypto, right? Which is a lot different than, a wealth management platform for a crypto investor, right? Because I don't necessarily think that we are only meant to be for crypto investors only, right? Like we have plenty of people on the platform who just put stablecoin in, USD for stablecoin, and earn interest. That's it. And then, some people, what they'll also do is they'll deposit stablecoin, and we have something called interest flex. So they'll deposit stablecoin, they'll earn 8.6% interest in Bitcoin. So their literal dollars, USD stablecoins, are earning them Bitcoin, which is a pretty compelling concept. And then lastly, on like this journey to helping create a very effective bridge of education, is we are in June coming out with a Bitcoin rewards credit card.
Nice. How do I get to the front of the line for that?
There's a wait list. If you refer people, you can move up. But the card is, look, a Visa-backed card. It's no different from any other card in your wallet. Right? You apply online, you get a credit limit, you have a dashboard, you see all your charges, you have to pay it off monthly, but you do earn 1.5% back in Bitcoin on all purchases. And that Bitcoin goes right in that BlockFi interest account that I was talking about, that we were talking about. And then we also have a slew of other benefits, up to $1,000 in benefits if you're a BlockFi customer, right? So it's all on our website, and I can share it with you too, so you can share it in the show notes.
Yeah, I'm definitely it's I'm doing this for the podcast, but I'm also sitting there going like, okay, well, thinking of like our business chase credit cards and the amount of interest we earn on that, and it comes back in this pointless USD, this worthless fiat money. Yeah, that's something that I'm definitely going to be checking out. And then so if I loan Bitcoin to you guys during interest, I can pull it at any time, right? Like it's not locked up for an extended period of time.
No. It's you pull it whenever you want. Yeah, we do have withdrawal fees. They're small, and your first withdrawal you get for free. But yeah, from like a timing perspective, you could deposit and pull out, tomorrow. It's not the end of the world. We're totally fine with that.
And as far as getting, people over the fear, do you think a lot of the hesitation to get into this space and custody, everybody talks about, put your Bitcoin on a cold wallet, and then lock it up in a safe and, bury that safe in your backyard or something like that,
Yeah.
But and I totally get, custody, being in custody of your own. And a lot of people reference Mt. Gox. Is that something that you think you guys are like the industry in general is still kind of fighting?
I think we're past that. I think the technology that's, in the security and the just general like infrastructure that exists now, very hard for those things to happen. That being said though, like as like a Bitcoin investor, and a lot of people in our world think about this as like Bitcoin as an asset, like, diversification is important, right? And maybe you don't want 100% of your Bitcoin allocation to be in one platform, right?
Mm-hmm.
I have friends who have, 50% of their Bitcoin are on BlockFi and 50% are in Ledger, just like in their couch, basically. And part of this, I think, is like test the waters with us, get comfortable with us as a business, read our blog, read our resources, understand who we are, understand the risk, watch the videos, listen to the podcast, like get smart about who we are. I mean, I can obviously talk about it all day, and so can the rest of my team, but it's also up to like our clients to help get smart on who we are and get comfortable to then allocate a little bit more and a little bit more so that, they're making more interest. We want to get to the point where we get, as I said earlier, as trustworthy as a bank, right? Where any one of us, or anyone listening to this podcast is going to go and put their direct deposit into a bank because they have zero worry in the world that money will go anywhere, right? Like how do we get to the point where, we are the personal finance platform that people feel the same way. And we're honestly trending in that direction based on our growth numbers. And I think it's helpful that like crypto and Bitcoin innovation is really paving a incredible wildfire across the financial services landscape right now. And it's all about education, right? It's all about just like getting educated, understanding it, get comfortable. I see how this works. I've seen the historicals. It makes sense to me. And then, the value comes with it.
And, I think one of the things people need to learn, and hopefully they are learning, is that you don't have to be, Jason Williams and earning $1 million in interest.
Oh, yeah, no.
if you're holding on to, $1,000 in Bitcoin, and you're not planning on moving it, you might as well have it somewhere where it's going to earn 6% interest
year over year. Yeah, compounds, right? And then you're earning 6% the next year on that interest that interest principal that you earned for the year before. No, I totally agree. We actually have a cool calculator on our website that's like it's an interest calculator. You can literally like put in your starting balance, the amount of duration you want, the currency, and then we'll like output what your interest would look like over that period of time. And it's compelling. I mean, when your bank account is only giving you 80 basis points, right? Which, to put that in context, 1% of 1,000 is what? $10. So 80 basis points is $8. So you're making $8, right, on your $1,000 investment, or $86, $90 on your $1,000 investment. So it's a huge difference.
Yeah.
For a lot of people. Like it's a big difference. For me, it's a big difference, right? So,
and you're keeping it in an asset that, and like putting it in the bank, you're keeping it in an asset that we all think is going to go up.
That might actually devalue over time because there's going to be more money being printed in the US, right? And that is where like it gets a little scary, where it's like, yeah, maybe you do want to have a little exposure to something that's a hedge against this potential inflation or hyperinflation that we could potentially see in the coming years.
Yeah, the hyperinflation. I'm curious your thoughts on that because, nobody really knows where it's going. But man, I heard on Guy Swan's podcast, he was just telling a quick story about a guy that was in the Weimar Republic, and he had $150,000 in U.S. terms. It was basically $150,000 worth of money, his life savings. It was locked in his bank account for 6 months during the hyperinflation, and they sent him his $150,000 after the hyperinflation, and the stamp on the envelope was more expensive than the money that they sent him.
Oh my God.
So it's like, when people don't think that that's like possible, it's like
people forget. Yeah. People forget history repeats itself. Like people forget that. And I know like, what's his name? Michael Burry, right? The Big Short author, or the guy.
I was actually going to ask you about him. Yeah.
Yeah. Like he shorted the entire mortgage market, made $800 million, whatever. He did a like pretty extensive post on hyperinflation on Twitter recently. He deletes all of his posts, but somebody on Twitter, this is why I love Twitter, like literally screenshots them all and calls them the Michael Burry archives, which is awesome. He did this entire thing on hyperinflation, and he walked through. I didn't go through it too extensively, but he did go through like some of the things that we've seen historically, and like people wheelbarrowing, pounds and pounds of money, to buy very like simple things like bread and sugar and things of that nature. Look, I don't know what's going to happen. There are people in the world that think, MMT, the treasury theory, where you can just, the Fed is not, governments should not be treated like households, is a positive thing. The more money out there breeds more productivity, more economic activity, et cetera. I don't know where we're going to shake out. I've never lived through one of these, right? Mm-hmm. I've never lived through a cycle where we've printed more money in a 2-year period than we have in 20-year period, right? Like, I don't know. So like look to the 20s and like, those time periods where that we were in a similar position and see what happened. I don't know. Yeah,
I know. I hate to like, anybody, my personal life, I'm like telling them about it. I'm like, look, I don't know exactly what's going to happen, but let's just say that 40% of the dollars in circulation didn't exist prior to last April. So I think that's a little bit of a problem. Like, I think you should be careful at the moment. What do you think about, one thing I wanted to ask you is, it kind of blows my mind that Michael Burry does not get Bitcoin.
I haven't gotten too deep into like his arguments for, or his arguments against Bitcoin.
I know he thinks it's over leveraged.
It's definitely, I definitely understand. I definitely kind of see that point. Look, I think like just generally speaking, a lot of the old guard has just taken a lot of time to come around. Mm-hmm. You've seen it like Ray Dalio, Jamie Dimon, Goldman Sachs, like all these guys were like Bitcoin, like not interested. It's, meant for criminals. It's, taking up too much energy, like all these like stupid arguments that are, are fun. There's no valuation. You can't value it, like, et cetera. And I think they've been relatively stooped over time. And literally literally just look at a 12-month Bitcoin price chart and it gives you, your entire kind of message. Like, I don't know if there's going to be a point where we correct down to, some low 2010 handle. And the reason I don't believe that is because I think Tesla, Mass Mutual, like every fund out there is just going to gobble all that up as soon as it gets to an area that they get comfortable in.
Yep.
So like, how can you have a massive decrease without massive sellers? And I think a lot of these players that have really deep pockets, real money, that are super long Bitcoin are not sellers. They're long. So they're gonna continue to buy. So I don't know. I think we're in a very different world. It's a very unique world.
And it's not so much an indictment on him not understanding. It's just, like you said, you got to bridge the gap of like knowledge.
He might understand it fundamental. And again, I'm just totally like assuming. I don't know any facts or anything at all. He, might fundamentally understand the technology, but just, I don't know, not want to admit that he didn't make the right decision. I don't know. Everybody's got an ego.
Yeah.
I don't know.
Everybody, people don't want to admit, that I get it.
Who knows?
Oh man, I hope that he can come on board, because once, I think we don't need more people to come on board, but like you were saying with Tesla buying and everything like that, it's like, if Bitcoin goes back down to the price that Tesla bought it at, what do you think Tesla's going to do? Are they going to try to lose money, or are they going to dump more money in and protect their long-term investment?
I'm not their treasurer, but you would think that there are like these limit orders, buy orders, like that all these companies have.
As soon as it hits a price,
when it hits 30K, press the button. Like, we're buying. Like, we're getting right back in.
And they're certainly, I don't think, having sell orders put in place.
Doubtful, right?
Yeah.
Because unless they're trying to like reap some profits or whatever it may be, but like Michael Saylor's not doing that anytime soon.
No. And lastly, what would you say to people that, a lot of people are getting in and they're like, man, it's too late. I'm too late to the party. What's my $100? What's my $1,000 that I'm going to invest in Bitcoin when it's, 60,000? What would you say to people that think that it's too late?
I would just look, we're the early stages, early innings of the party. Yes, the price of Bitcoin right now is expensive for a very large majority of the population to buy one. But that being said, I always say, like, I personally am more confident in, the price of Bitcoin rising, 30, 40, 50% over the next 6 months than I am in any tech stock or any biotech or anything that I've seen, right? Like, there's a confidence factor there. So I think a lot of people need to remove this like concept of like, you're going to make like 5 times your money or 10 times your money, and just think about it in a relationship to other assets that they could potentially invest in. You could invest in the stock market. You could invest in gold. You can invest in real estate. None of them are going to be able to outperform Bitcoin, I don't think, this year. And therefore, like, your investment is that's the best possible investment that you can take, or approach that you can take, right? So I think that's
better than sitting on fiat dollars.
Look, it's like, your relative performance over time will be better based on historicals, right? If you invest in Bitcoin, no matter how much you invest, relatives against other markets. So the S&P, like, general real estate, gold, other alternatives. So if you're comfortable with like an investment process where you're going to be putting your dollars to work, and you want to earn in an avenue that's going to outperform other areas, Bitcoin is a fantastic place to be. But Bitcoin is probably not going to allow you to triple or quadruple your money anymore. But like, let's be serious. Like, there isn't a whole lot of places that you're going to be able to 3-4x your money in 6 months.
Yeah.
Right? It is what it is.
Yeah. And then who knows, maybe if you get lucky and hit that hyper Bitcoinization, then everybody just, okay, I guess that works.
And then all of a sudden you've got 100% growth year over year. You've earned 6% on that 100% growth. That happens 3 years in a row. You've got it just starts to add up, right?
Mm-hmm.
There's a tremendous amount of value that you can bring out of it.
Yeah.
And then with BlockFi, you can start taking out, you can borrow against it. You can use it as a physical, as a financial asset, right? For financial products. You can use our credit card and add to your stack. You can, earn interest, add to your stack, the whole 9 yards.
Yeah, that's it. The taking out a loan against it. I kind of got it, but once you kind of explained, oh yeah, you're either going to pay 20% in capital gains or 9% interest to you guys, and that's and you also get the appreciation as it appreciates. So yeah, I'm like, oh man, I'm not selling anything. If I need cash, if I need extra cash for something, then I think I'm gonna have to look into this BlockFi thing, and you might have got a customer here. Anyways, well, Shayne, I really appreciate you coming on, and helping walk me through my my non-financial mind through this BlockFi platform, and help shed light on. I think this is going to be big future, and where the industry is going, and where people are going to start earning more money as time goes on here. So thanks for coming on and helping me out there, and helping the audience too.
Yeah,
all right,
of course, it's been great.
And are you going to be down in Miami for the conference?
I will be in Miami for BTC. I think I'm getting there on Thursday. So if any listeners are going to be down there, if you're going to be down there, Corey, let's definitely meet up in person.
Cool. Awesome. All right. Thanks again, Shayne.
All right. Take care.
Thanks again to Shayne for coming on. I hope you guys learned something from that. I know I did. And it's, exciting to see that the potential of, earning additional revenue and interest off of, Bitcoin that you have, and other ways to leverage your position. So I was really glad to have him on, and really, be able to walk me through all of that. So I forgot to have him mention, but if you want to follow him on Twitter, it's at BlockFi Shayne. It's BlockFi, it's F-I, and then Shayne with a Y, SHAYNE. And then you can also check out BlockFi at blockfi.com, or in the show notes, I'll have the blogs that he mentioned and stuff. So thanks again, everybody, for listening. If you want to get in contact with me, follow me on Twitter at Bitcoin Simply. Also on YouTube, we have the videos going up on YouTube as well, but we're on all the podcast channels. And if you want to email me, just it's Bitcoin Made Simple Podcast at gmail.com. Thanks, everybody. See ya.